Okay, 6th of March, Rudy here. Welcome to the Daily Investment Show. We go through ASX US indices, subsectors and commodity prices, looking for places to invest using the ratio charts. So what a week, eh? So this is the ASX 300. Finished last week with a big green candle above the dome and then slap, down you go. So we're actually at an interesting support level here. We've got the horizontal and this one up here. I think it'll hold. So the big tests are our two big sectors. So we've got the financials. So they could still come down a little bit, and materials have been whacked this week. If we look at them on the daily chart, I think we're approaching some support around these areas. They had run pretty hard, so I don't see this crashing, because we'll have a look at commodity prices. They don't look like they're going to crash. So, and then we've got energy. The energy sector's still going berserk. It's where you wanted to be this week. How's the old XCJ, XFJ, the dividend play, and it always does that to me. The ASX version of energy. So we still got energy outperforming financials. So we look at the king to king. So Woodside looked like he's going to have a crack at all-time highs. And the other king, CBA, so the old ratio, Woodside over CBA. So the switch has been good. The gold miners, so they got whacked this week as well. So looking at the daily chart, might be a bit more downside for them, but that's okay. You got to have a breather. Now this is the one I thought this might happen. So this is our tech sector. So we've had a nice little rounded bottom breakout. If we compare our tech sector to the All Ords, or the ASX 300, so we can see, I think we're going to find the tech sector is going to outperform the ASX 300. I think that it had been kicked in the head a bit too much, and our tech sector over the Nasdaq. This is another one I thought might happen. Hasn't confirmed yet. So this is our Aussie tech over Nasdaq. So I'm expecting our Aussie tech to actually outperform the Nasdaq. Full of shit, Rudy. Property index, so the REITs getting hammered. We'll have a look at interest rates. They're going up. Okay, so over in America, the VIX spiked up again last night. So you can see the bit of a sitting in the middle here. Still haven't hit panic stations yet. The S&P 500. It's just hanging on to support. I think they got their employment figures tonight. The Nasdaq. So the Nasdaq looks pretty healthy actually. It's a nice green candle, and we'll see why too about that. So the Magnificent Seven. So they're looking pretty good. If we look under the hood, so Nvidia doesn't look like it's going to crash. Now Microsoft. So Microsoft looks like it's bouncing, and it's the leader of this software sector. So this is the American software sector. That was that whole AI fear thing. So that seems to have gone away. And if we look at the software sector over the Nasdaq, so we've got the software sector going to outperform the Nasdaq, I think, in the near future. Okay, materials in America, so they were down this week, but trend still up. Financials, just got their fingers on the top of the building, trying to pull themselves up. If we look at JP Morgan, the big kahuna, so he's sitting right on the 50 weekly there, so he'd want to hold. Energy sector still going up. Oh yeah, got some. I know that comes later. Rudy. Okay, the mid caps, American mid caps. So they're pretty boring, but not crashing. Holding the 20. The mid caps over the S&P 500. So they've been deducting from the S&P. So the S&P needs these guys to bounce to help lift. China. Looks like it's China. What's the daily chart? Yeah, okay. So looks like China is in for a short-term bounce. New one for you. Israel. I missed it too. Don't worry. Wanted to be in the Israel stock market. Something's going on there. Emerging markets, so they're back to the 20 weekly, so technically on support. Your high growth super fund, so it's technically on the 20 week support, but it's gone nowhere. So the old ratio, if you had a bit of an energy bent in your super fund, you'd be doing very well. $10 a month, ASX US shares ETFs, that's what we do. Member direct in Australian super or stake with US ETFs, we do it all here. VGS, pretty boring. So if you had an energy slant other than VGS, you'd have more money in your pocket. Okay, interest rates. So that's a pretty bullish candle. So Aussie 1 year up to 4.3. Our 10 year, if we just zoom back on this too, this is a monthly chart. Because people can't, especially younger people, can't imagine interest rates being at 14%, but they were a lot higher than they are now, and that looks like if that was a share, you'd probably be buying that. So hopefully you fixed your mortgage rates a number of months ago. Did one of those videos. I know some people did. Okay, US 1 year interest rates. So again, looking more bullish than bearish, and they're 10-year rates. So again, they're bouncing off support. What's their big monthly one? So they've got the same. Interest rates used to be at 15%, and we're at the bottom of this wedge triangle thing here. So there, looks like interest rates are on their way up. So the US dollar, so it's sprinted a bit hard this week, so it's not a spec stock, so I just think it's gonna for a little bit. So our Aussie dollar is probably just gonna a bit as well. It doesn't look like it's got the strength to push through. Our gospel, the commodity index, made up of all your energy, industrial, precious metals, grains, softs, livestock, and we'll have a look at them. So that's where we're focused on the channel, and that stuff. Gold. So we'll look at the daily gold price. So it's still just hanging in there. No panic stations. So the gold stocks are being oversold, I think. Good buying up for them once they get a bit of green in that daily candle. Aussie dollar gold looks fine. So Bitcoin. Okay, so we've now technically got a higher high. So now we've got to see if it can make a bottom and then go for new highs. I don't touch it. Silver, the girlfriend. She's just hanging in the cup there. So that's fine. That's all you want. If that's the best Mr. Slam you can do, then I'm happy with that. So Chinese silver price in US dollars at 97. So the premium, we'll go to a weekly chart. So the premium is still hanging around $10. So it's obviously scarce over there. Platinum, we'll go to look at daily charts. Yeah, so there's a bit of a bottom, a bit of a rounding action there. Palladium, let's see, it's on support. Copper. So it'd be nice to see copper have a bit of a bounce here. So it's pretty, well, you just got to call it flat, because we've got two candles here on the day, one up there and this one down here. So there's this stuck in the range. Oil. So that's, oh yeah, I've got some charts for you just to show how pathetic we are. I saw this one today. So the US has turned into a net oil exporter. So they produce and refine everything they need, and now they're selling it overseas. I wonder, aren't they happy about a higher oil price? Hurt China, hurt Europe. Maybe that's what the war's about. Don't say that. And then here in Australia, we import 90%. We produce it and then we sell it off. We ship it off. And this is still my preferred ETF in America, attached in this industry that's getting ready to go kaboom. Anyway, the oil price looks like it's going to have a crack at $92 by the looks of that. So I hope you filled your tank up. The oil to S&P 500. So iron ore. So iron ore is having a bit of giddy up here. Broken above this old support line. Lithium. So it's pulled back but still at all-time highs there. Uranium chilling. So we've got thermal coal. So it's ran a bit too hard. So, well, the trend is still up, not crash. Coking coal. So it's trying to find a bit of a bottom there. What's nickel? Nickel. Chilling. Aluminium. Trying to make new highs there. Bauxite. Looks pretty strong. Tin. Consolidating. Manganese wants to join the party here. Okay, my favourites now. So soybeans. So you can actually buy these ETFs as an investment on the US. So soybeans, going to be long soy. Corn. Corn's starting to break out. So we're going to have fuel inflation and food inflation by the looks of it. And wheat. Wheat looks like it's breaking out. And the new one I introduced yesterday, our hogs. So the hogs are going to be breaking out soon too. So I hope you got exposure to hogs. Alright, have a good weekend. Hopefully the US market doesn't shit itself. If you like that, give us a like. See ya.